Welcome to Celebrity Investing, your go-to source for insights, tips, and updates on navigating the exciting landscape of personal and global finance. Please like, share, and subscribe for more exclusive content. This is part 1 of value stocks versus growth stocks. Which investment fits your goals? Trying to decide between value stocks and growth stocks can feel a bit like a guessing game for investors. Yet, understanding their differences is key to making smarter choices. Value stocks often attract those looking for stability and income, while growth stocks draw in risk takers chasing big returns. So, which is right for you? This video will help clear the air by breaking down what sets these investment styles apart. With this insight, you'll be better equipped to align your portfolio with your financial goals. Understanding value stocks. When investing, value stocks often stand out as a sensible choice for those who yearn for stability and consistent returns. If you're exploring options that offer steady earnings without the volatile swings, it's worth understanding the fundamentals of value stocks. Here's a closer look at what makes these stocks unique and appealing to many investors. Definition of value stocks. Value stocks represent shares in companies that trade below their intrinsic worth. They're like hidden gems in the stock market, often overlooked by the masses. These stocks usually belong to established companies with sound business models but are priced low due to temporary setbacks or broader market declines. The discount on their price could be due to anything from economic downturns to sector-specific challenges. Key characteristics of value stocks. So, what exactly gives a stock its value label? Here are some key traits that investors often look for. Low price to earnings, P/E ratios. A hallmark of value stocks is their attractive P/E ratios. They often signal that a company is undervalued compared to its earnings potential. This means you're paying less for each dollar of earnings, which can be enticing if you spot recovery on the horizon. Dividends. Many value stocks are known for their consistent dividend payouts. These dividends can provide a steady income stream, which is particularly appealing for conservative investors who prioritize income over capital gains. Stable earnings. Value stocks typically belong to companies with a track record of stable earnings. Even though they might not be growing rapidly, their solid earnings history can be reassuring for those wary of risk. Examples of value stocks. Identifying real-world examples can provide a clearer picture. Companies like Johnson & Johnson, known for its reliability in the healthcare sector, or Coca-Cola, a stalwart in consumer goods, often find themselves on value investors' lists. These companies have demonstrated resilience and continuity over decades, making them classic examples of value stocks amidst turbulent market conditions. Being a value investor often requires patience and a keen eye for opportunity. It's about finding stocks that others might deem unexciting but have the potential for rewarding returns in the long run. Are you ready to spot these hidden gems in your investment journey? Understanding growth stocks. Navigating the stock market offers various paths for investors, and one intriguing option is growth stocks. These are often considered the shining stars of the investment spectrum, capturing the imagination of those looking for substantial financial gain. Let's explore what makes growth stocks stand out. Definition of growth stocks. Growth stocks represent shares in companies expected to grow at an above-average rate compared to other companies in the market. These companies typically reinvest their profits into their business to fuel further expansion rather than paying dividends. They're like athletes in a constant sprint, racing ahead with ambitious plans and strategies. Investors are drawn to their potential future earnings, betting on their ability to expand and innovate. Key characteristics of growth stocks. Wondering what sets growth stocks apart? They come with distinct traits that attract adventurous investors. High price to earnings, P/E ratios. Growth stocks often trade at high P/E ratios. While this might suggest they are overvalued based on current earnings, it's typically a reflection of expected future growth. Investors are willing to pay more today because they anticipate substantial earnings tomorrow. Reinvestment of earnings. Unlike value stocks that might distribute dividends, growth companies usually plow their profits back into the business. This reinvestment fuels more innovation and market expansion, aiming for a bigger slice of the pie rather than sharing it. Rapid revenue growth. These companies show impressive revenue increases year over year. They prioritize expansion, innovation, and capturing market share, continually pushing the boundaries of what's possible in their industries. Examples of growth stocks. Looking at some real-world examples can help illustrate the allure of growth stocks. Consider companies like Amazon and Tesla. Amazon has perpetually invested in logistics, technology, and service offerings to stay ahead, while Tesla continues to revolutionize the automotive industry with electric vehicles and energy solutions. These companies have carved out commanding positions in their respective markets, driving their stocks to new heights. Growth stocks demand a certain appetite for risk, as their journey involves navigating rocky terrain for the hope of spectacular vistas. Are you someone who feels the thrill of the chase, ready to ride the wave of potential profitability? If so, these high flyers might just be what you're looking for in your investment strategy. Value stocks versus growth stocks. Key differences. Choosing between value and growth stocks isn't just a matter of simple preference. Each type represents different investment philosophies and strategies. Understanding these differences can help clarify which path aligns with your financial goals and risk tolerance. Investment strategies. When it comes to value stocks, the strategy is often about buying low and selling high. Value investors look for stocks priced below their intrinsic value. They rely on metrics like the price-to-earnings (P/E) ratio or price-to-book (P/B) ratio to identify undervalued companies. This approach demands patience and a long-term horizon, betting that these stocks will eventually reflect their true worth. On the other hand, growth investing is about capitalizing on future potential. Growth investors search for companies with significant potential for market share expansion and increased revenues. They're willing to pay premium prices today for the expectation of larger profits tomorrow. This strategy requires a keen eye for innovation and trend-setting industries. Risk and return profiles. Risk and return profiles differ starkly between these two investment types. Value stocks are typically less volatile and offer the safety net of dividends, providing a regular income stream even when stock appreciation is slow. However, the potential for massive gains can be limited. Growth stocks are the roller coasters of the market. They offer a thrilling ride with the possibility of high returns but come with significant risk. These stocks often don't pay dividends, meaning investors rely solely on stock appreciation for returns. If the anticipated growth doesn't materialize, you could face steep losses. The key is knowing how much risk you're willing to tolerate. Market conditions and stock performance. Market conditions heavily influence both types of stocks differently. Value stocks generally perform better in stable or declining markets. When the market faces uncertainty, investors gravitate towards the perceived safety of reliable, income-generating stocks. In contrast, growth stocks thrive in robust economic conditions. Bull markets often see growth stocks soaring, fueled by investor optimism and the availability of capital for expansion. However, they are more susceptible to market downturns. In bearish markets, the high valuations of growth stocks can fall rapidly, highlighting their vulnerability in uncertain times. It's through understanding these dynamics that you'll better align your investments with your personal financial strategy. Whether you're drawn to the reliability of value stocks or the excitement of growth stocks, knowing the inherent risks and rewards will guide you to informed decisions. Which path feels like the right fit for your investment journey? A steady climb or an exhilarating ascent? Advantages of investing in value stocks. Choosing the right investment strategy can feel like finding your way through a maze. When it comes to value stocks, there are some clear advantages that make them a compelling option for many investors. These stocks can offer sound opportunities for thoughtful, patient investors. Potential for undervalued opportunities. Value stocks often present themselves as bargains hiding in plain sight. They're like finding a diamond in the rough, where the market has undervalued a company's true potential. Why does this happen? Sometimes, it's due to temporary issues, market overreactions, or even sector-wide slumps that don't reflect a company's actual worth. Investing in these undervalued stocks can be rewarding. They might not look like much at first glance, but with a little patience and insight, their intrinsic value often shines through. Here's what makes them appealing. Mispriced assets. Market inefficiencies can lead to stocks being priced below their true value, giving you a chance to buy low. Potential for price corrections. As the market corrects itself, these stocks can offer significant returns when their prices align with their true worth. Long-term growth. While growth might be slow, it often is steady, providing a reliable path to building wealth. Value investing means having the foresight to see what others might miss, offering a unique path to potentially lucrative returns. Stay tuned and continue to watch our videos to gain valuable insights into the world of finance. Subscribe, like, and share to continue your journey to financial success.